Good morning. Good. Yeah, I see the energy going down a bit. So in my job, I have to deal with 5 things. Innovators and dreamers like you, investors, regulators and government, and the incumbent banking industry, and the last one is the consumers. So I'm just going to tell 2 stories, 2 pieces, how this industry is transforming, okay? I know a lot of you here are entrepreneurs, but just bear with me because there's room for you in that journey. And the whole purpose of my presentation is to give you that 2 sides of stories, what's happening in the banking industry and how are these banks and institutions really trying to transform. We just heard a lot last night that banking is evil, maybe. But while I'm talking, I want some of you to just pick your phone and do this search in Google. JP Morgan Fintech Budget 2018. We'll catch up later on that. All right, so what's digital? Very misunderstood term, so my simple definition is it's a channel of engagement and interaction between a business and a consumer or 2 consumers. Very simple definition. And what's digital disruption? It's really the unsettlement of the incumbent business models that's brought about by a lot of you bringing in creative ideas and solutions to the market. So that's kind of creating this unsettlement. And digital transformation is nothing but, it's a very structured process that somebody has invented or is still inventing, where the incumbent businesses are trying to transform by adopting digital technology so they can adapt to the new market. And for all of them, there's 2 choices right now. There's this Kodak choice. Everybody know about what happened to Kodak, who refused to innovate. And then there's the Uber choice. Someone who actually saw the opportunity, brought in a digital technology to an age-old industry and revolutionized it. So that's the juncture where this industry is in. And why we have to transform is, it's a new generation, new thinking, new needs. It's a consumer-centric economy where the nexus between, the consumer and the startup is so close that the incumbents are finding it very difficult. And if you look at the behavior of consumers today, and we had a great discussion yesterday, it's this instant gratification, right? No gap between buy, borrow, and pay. Immediacy is very important. And the consumers of tomorrow, it's all about this age of, how do you survive in the age of autonomous ordering? Your fridge, your car, a lot of those are now equipped to order on your behalf. A frictionless economy is getting shaped without you knowing or not. And we had a lengthy discussion yesterday about this. So in the industry, what's happening is it's very consumer-driven, right? And these consumers are having this expectation of better experience if they're already within the financial ecosystem. And those ones who are not included is really going for this hope of inclusion. Paul talked about it. 1 in every 3rd job globally is created by small to medium enterprise. Yet 60% of them never get financial support. Do you guys have any idea what that market is? $2.3 trillion globally according to World Bank. That's what the power of fintechs and the startups is going after. Okay? Banks and large institutions cannot go after that market. It's tough for them to change. So this hope is the last piece is even in North America, 12 million people who don't have a bank account. And Uber found it out the hard way. That's why they had to start a banking system on their own. And it's all driven by this need for decentralized, democratize the industry, which has kind of led to a new digital economy getting created out in the world. And what's happening behind the scene is businesses are finally waking up and they're trying to digitize and automate their business. And it's all being fueled by things like AI, blockchain, the open banking API, digital identity services. But the regulators are coming out and finally starting supporting this. And at the end of the day, finally, we got this sort of financial promise we have been making for ages, reaching out to the consumers through the fintechs, through the challenger banks, the neobanks, and the platform players. So how many of you here follow KPMG's fintech report closely? Every quarter they publish it. $627 billion has been invested in the last 5 years in 3,600 plus fintechs. Last 2 quarters, Q1 and Q2, $57 billion in 865 fintechs out there. So you think 3,600 fintechs are going to survive? And I think Paul just touched on it. What's happening is there's a slow sort of merging happening now in the industry because you don't want to compete with each other. You don't want to trip each other. So fintechs are finally starting to come together and starting to build the platforms that we all been promising. And if you look at the Global FinTech Adoption Survey, this is a 2017 results. Look at the ones on the top side, India and China. They're poised this year to have 80% of their e-commerce business run through fintech. Look at where Canada is. Okay, it's a sad state. Okay, and the other thing that's happening in the industry is this notion of challenger banks. It's all over Europe, it's all over Asia, it's all over Australia. The digital-first banks that are coming up and starting with one product and then growing into a full-stack service provider. And the company right over there, Revolut, just type revolut.ca, just launched in Canada. They haven't officially started their business. That's the first challenger bank that's coming into this country. And then there's all these neobanks. And neobanks are very simple. All of us can get a banking license. All that you got to do is curate, sit in your basement and become a bank overnight. Okay? And then there's this place. It started in Germany. Now it's just growing all around the world. The concept of platform. You start with this big Lego piece. It costs you nothing to get there. And then you decide by adding APIs. Each of the fintechs here, the blockchain providers, could become an API there, and you can make revenue by actually somebody out somewhere in the world creating a bank on your platform. It's a great revenue opportunity for every one of you here. Then, there's this concept of open banking API. I mean, for centuries we have been doing this, a one-to-one relationship with a bank. But then you still don't get a loan. You still don't get certain service that you expect. Why? Because all that they know is you and your relationship with that entity. What they don't know is about what other banking you do, what other insurance products you got. You don't have the holistic perspective. So open banking came out. So what is open banking? Open banking says, well, if you allow your identity to be shared from all these entities and share with your primary bank, they'll be able to serve you much better. They'll be able to understand your risk much better. Any RBC clients here, Royal Bank? Yeah, you all have open banking today. You can actually tell Royal Bank to bring your entire investment account, anything, anywhere from the world, and you give consent. You can control that consent, and it'll actually give you a better retirement portfolio for you. So it's out there. Don't think this is a PowerPoint. It's out there. Then there's this thing, cognitive banking. In the US, early this year, they came up with a regulation. It's called ADA, American Disability Act. And in Canada, Bill C-81 is getting tabled. If you don't provide financial services through a cognitive layer, you're going to eliminate 1 in 7 people who are disabled. You're going to eliminate everybody who's got a different language. Why are you creating applications in English and call it digital app and giving it to someone whose mother tongue is not English and expecting them to fill that form? There's lawsuits that's coming up in the US against financial services institutions that are doing this. There's a company in the US that crawls through financial institutions' website and is figuring out who's not having an accessibility layer and is calling in for class action suits. Cognitive layer is going to create this sooner or later. This is going to be the media of interaction, not a fancy web page, not a great app. Cognitive layer is going to be the language of interaction between a financial layer, services layer, and each one of us. And then comes in artificial intelligence. Well, with the first industrial revolution, it taught us to do mechanization. The second one talked about mass production. It started getting us more and more lazy. And then the third one got us into the artificial narrow intelligence, because artificial intelligence has got three pieces, right? We still haven't seen the full utilization of AI. A lot of people talk about AI. You're talking about augmented intelligence. You're not talking about artificial intelligence yet. So we are at the fourth stage of industrial revolution where we got this artificial general intelligence. We touched it. We got it. We are getting there. And then by 2025 or so, I can't predict, but it's going to get into the stage of, we're going to learn from the machines. They're going to be much better than us. That's called ASI. European banks and institutions are preparing themselves for their role and their identity in that ASI world. Right? Don't just talk about AI. Just think about where AI is going. It's not about writing a great program and a code and say, I do prediction. Well, if you do prediction well, none of us would be sitting in this room, because every week we will be winning a lottery ticket, right? Perfect. The other thing that's happening in the industry is this thing called robotic process automation. So this is a mortgage process. If you apply for a mortgage, you'll be asked to put in some documents. And then banks and institutions have people who are just unzipping this attachment and putting it in a folder. 2 minutes, 3 minutes per person. You can buy commodity RPAs today that will just unzip that and put that in a folder. Think simple. Big value. And look at how the mortgage gets paid at the end, and it takes 3.5 to 4 minutes average mortgage to put that into a general ledger system. You can buy commodity RPAs today and improve that. So when you talk about automation, process improvement, efficiency, ladies and gentlemen, this is what we're looking at. Right? The practical aspects of it. I'm not going to talk about blockchain because there's been so many discussions and everybody know about it, but I'm just going to skim the surface here. What drove it? Where did we go? My view of blockchain is not crypto, it's not just anything. It's anything that's got a digital asset and digital value, and you guys can exchange the value. Right? How many of you here has a Rogers or Telus phone? So you get 2-3 gig for $50. What if you don't use that 2-3 gig? You lose it. Go to Africa. There's a second commodity market where you can tokenize your unused time and sell in a secondary market. Didn't you pay for it? So tokenization, digital value, digital asset, that's the value of blockchain. Use it for those kind of initiatives. Smart contracts. And we had lots of discussion last night about it. I'm just going to skip through it, but you know that's the way it's going. Eliminating the middleman. And then digital identity. This is single-handedly, I was kind of slightly disappointed yesterday. I talked to many blockchain people, revolutionizing blockchain industry. I got the greatest idea. But how are we going to connect these ideas together? Where's your digital identity solution? I didn't hear from any single person about that opportunity. And this is what's going to result in that financial disintermediation at the end of the day. So this world, as every speaker said, is moving forward. Either join the train or just wave a goodbye. So what's the industry doing, the banking industry? So all this, banks are really transforming, or they're trying. As Paul said, the ones who are not transforming, good luck. The ones that are transforming, you've got to be worried about it. You might say, oh, I got a fintech, I'm cool, I can do everything. But for those who have finished the search on JP Morgan, will know that JP Morgan just invested $10.8 billion in fintech budget this year, of which 5.8 is for fintechs, that they're creating micro fintechs under the brand, and it's going to compete with you back. Try challenging JP Morgan, who has got $10 billion in fintech industry. They're creating the largest fintech campus in Silicon Valley as we speak. So don't think banks are stupid and staying there, not doing anything, and you got an easy run. No. Okay? So they're creating this marketplace of trusted utilities, which is really catered for the consumers, where all these guys are collaborating, right? The Paytms of the world, the Alipays of the world, the AirAsias of the world, they're all coming together. All this industry is just coming together. And I'll show you some transformation examples later. But I just want to get into what is the industry then doing. So that was a story of what's the possibility? What's all the technology that's driving it? Now let's look at what they're doing really to transform. It's hard, right? Some business that's been around for 20, 30, 40, 50 years, it's hard for them to transform. Let's see what they're doing. So they're actually going and asking that first question, do I need to change my business model? If I don't change my business model and try to get into a digital transformation, it's a tough journey. So they're thinking about pivoting their business. And then comes this notion of digital ambition, which I'll define, and then there's a journey that's happening. So they're not sitting there and saying, oh, let the fintech and the challenger banks and neobanks take over. I'm just going to do nothing, right? They are acting. So let's see what their journey is. So they are all basically saying, well, my existence in the past used to be banking. I'm a banker. I wear a three-piece suit, come to a bank. That's who I am. But they realize that going forward, the banker of future will be thinkers, designers, and creators. They won't be a banker. They realize that. So the journey is all about providing experience to the ones that are currently banked, the inclusion of those ones that are underbanked, and hope for the ones that are not banked. In big terms, but let me define that as we go along. So the identity of bank and financial institutions has switched. What is an institution? What comes to your mind when we talk about bank, institution, a big building? I mean, the size of the bank is judged by the size of the tower that you see. So you're already confining yourself to boundaries here. So in Asia, they started saying, that's not why I started this industry back in the 1400s and 1500s. It was all about the partnership. So the brands in Asia and Europe and rest of the world is switching from an institution identity to basically a partnership identity. This is State Bank of India, 420 million customers. Their website or their app is called YONO. You only need one. 64 e-commerce, like the comment that Paul was making, from grocery to railway ticket, everything is in the bank side. Why would you need 20 apps where you have to pick your credit card, your financial information, go do the transaction again and again? Why don't you just get that all service, a partnership with your financial institution? That's how they're pivoting and seeing themselves going forward. Now, all of these institutions and the industry, this is the dilemma that they're all facing. They got each other to compete. The JP Morgans, I mean, like if I ask my credit unions, we got around 177 credit unions we serve, they're all worried about the banks. And if I ask the bank, they're all worried about JP Morgan. If I ask JP Morgan, they're all worried about Ant Financial. So there's that peer-to-peer worry that's happening. And then there's this small players like Google and Amazon that they're worried about too. And then the fintechs, there's some sort of worry about that. But the real worry is about those guys that they can't anticipate, the ones that are coming from the telecoms, the airlines, the food industry, and getting into the business of banking. That's the one they have no idea what's going to happen, who's going to be their competition. So what are they doing? They're defining their digital ambition. You can always call it strategy, but I want to call it ambition. Everything starts with a dream. So that dream starts with this type of ambition, and there's only 3 choices right now available. If you're an incumbent, there's not much you can do. It's like, can you add a couple of rooms in your house? Yeah, you can jack it up and add a room, and we all know how successful we will be if you jack up your house. That's the first one. You can enhance your business a little bit. And the second one is the guys and the girls who are really transforming their business into a digitally transformed business. And the third one, it's very hard unless you're a neobank or a challenger bank or a tangerine of the world, because they started as a digital bank, as a digital institution, as a digital engagement platform. So they are fully digital. It's very, 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 very hard for an incumbent to get to that stage unless they completely redo their business model. So how do you define your digital dream? DBS, a very, very large bank out of Singapore, said, hey, we want to define our digital dream. And they said, we want to be like Google, Amazon, Netflix, Apple, LinkedIn, and Facebook. What does that say? Ganalf. Doesn't mean anything. So it was all about, I want to be like them. And then they said, stop. Why are we trying to be like them? Why can't we be a step better than them? So they said, our digital dream is to be the D in Gandalf. The missing piece was the D. It's an amazing dream. It's a brand identity that's propelling them to a level beyond their imagination. That's a dream. Don't write strategy. My vision is to be 25% better than my peer. That's not a strategy, that's a hope. Okay? So who's your partner in this journey? What are the institutions finally realizing? They're realizing that bringing in the large, think tanks and consulting firms are not going to help them. You bring in your consumers and ask them, how do you want me to reshape the industry? We did a good exercise yesterday, didn't we? Like defining 5.0. And thank you for that. It's a great discussion. But when you do that, you get ideas that you never thought of. The consulting company is going to just give you an inside-out thinking, but we want outside-in thinking. So what's happening with all these players? They have three choices when it comes to the financial choices and the innovations that you guys are bringing in. They're either going to compete with you, they're going to incubate the JP Morgan story, or they're going to collaborate and co-create with you. Okay? If you ever want to go to CB Insight and just look this up, every institution, their layout, whom they're collaborating, whom they're partnering is out there. So it's all great. Then you go back to a bank, and there's this title called Chief Risk Officer. And then you're going to have this discussion. Oh, I found this cool fintech. I think we should bring in. Oh, I found this cool blockchain solution. We should bring it in. And then you see this challenge. Oh, it's too risky. So risk of not doing today far outweighs the risk of doing. So this is a message that I'm giving to all of them, is you better start changing. You better start changing by thinking through the lens of your consumers. Which brings us to our last slide here. How do you bring all those things to the organization, if you're an investor or if you're already a banker? It all starts with this outside-in thinking. You look at your consumers, you understand their personality, you understand their behavior. There's a lot of technology out there that helps you with this. And you understand their journey, you understand their expectation. Never look at somebody as coming into your bank for a mortgage. Ask yourself, how can I be part of your home buying experience? How can I be part of your children's first car buying experience? That's a completely different mindset that we need to infuse in if you want to sell your technology to those institutions. And then you co-create with them. You make your consumer, you make your investor, you make your innovator all part of that journey. That's how, ladies and gentlemen, you're going to provide that experience, inclusion, and hope. So in conclusion, what I want to tell you is I don't believe digital technologies are disrupting anything. Everybody in this room, the people are. I don't think digital technology is innovating itself yet, but you guys are. So I really want to encourage you, if you're from the innovation side, to continue your dreams, aspiration, and just keep marrying that with the technology, and magic will happen. And to those innovators who are from the banking industry, the investors, simple message is, I'm going to repeat myself, bankers of future will not be the bankers, the three-piece suit bankers of today. They will be thinkers, designers, and creators. Let's just work towards that. Thank you very much, everyone.